TCA Ananth now joins in. Hi sir, thank you very much for taking the time out. Well, earlier in the numbers released in Feb, the capital formation numbers were negative for 2 quarters of FY17. Now they are higher. Could you just explain that discrepancy to us?
You see, I am at this point on the quarterly allocation of Godfrey's capital formation, I'm not able to say a great deal more. It is actually dependent on the sectoral output structures which are visible, because it's principally an allocation which is being made. In part, it may be a reflection of some of the IIP components which are there in capital goods and so on and so forth. But at this stage, remember the capital formation is very, very much indicator driven and from the sectoral production side estimates. So beyond that, it's very hard to give more reasons than why that has happened in the fourth quarter.
All right, so let's make things simple then. If I just compare the quarter 3 and quarter 4 GDP numbers, quarter 4 shows a much more slowdown, in fact. But the high frequency data like company earnings, two-wheeler sales, they've in fact showed that things have picked up in the Feb-March if I compare it with November-December, when in fact activity slumped. Why is this discrepancy?
The indicators we use, first of all, from what I gathered, is cement construction as revealed in IIP in the fourth quarter is significantly lower than the cement construction in the third quarter and in fact the first 3 quarters. That is partly one of the factors behind the construction index, and corporate performance in the fourth quarter similarly on the whole, from whatever data was available to us, I think till the 20th of May or thereabouts, the aggregate corporate performance in the fourth quarter is a little weaker than what would come up in the third quarter. These are the factors which went into the third quarter compilation. Specifically on financial services, one other element which is there is that in the third quarter, while deposit growth was quite robust, credit growth was slow. In the fourth quarter, the deposit growth tended to show signs of not growing so much and tapered off. That has partly influenced the financial services calculation.
Okay, sir. So your sense is that Q4 activity did slow from Q3?
Principally by the high frequency data, but remember one more thing, the growth rates which we talk about are year-on-year comparisons, and for a variety of reasons in constant prices, the last year's Q4 had come in quite high, and this is partly the quarterized structure of WPI behavior which I talked about and IIP behavior which I talked about. Last quarter, if you remember, in Q4 there was a significant bump being received by the fact that WPI was still in negative territory, and this quarter in contrast the WPI is back in positive territory, and the consequently quarter-on-quarter growth in WPI in the fourth quarter to previous year's fourth quarter is quite sharp. So that effect is also there in the fourth quarter numbers.
All right, sir, can you wear your economist hat then and tell us if the slowdown that started from quarter 2 is troughing out, if it's troughing out at all, in fact?
Well, let me put it this way. There are a number of long-term processes at work, and of course, various policy events play their own role. But one long-term policy event I think we should keep in mind when we are looking at the growth trajectories is the behavior of commodity prices, which plays a big role in constant price estimates. Commodity prices had crashed in 2014-15. And the consequences of the crash was that for a full year from 14-15 through 15-16, we saw very low commodity price growth and therefore consequently low WPI growth. Now that crash having bottomed out and commodity prices are now hardening relative to that crash and rising slightly, the effect is to boost commodity prices and therefore sectors dependent on the commodity prices. That is, without any further policy input, going to give us upward momentum to growth pressure on its own. Now we will, if you take into account the policy dimensions and the restoration of business confidence, the chances are growth will also be positively impacted by all of those. So looking ahead, I think we will need to keep all these factors in mind when we make future projections.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking.